Okay, so we're going to look at our pairs that are currently on our watch list for the third week of June. As always, we want to look at the dollar and oil for all of our confluences, as they are the major drivers of the economy at this time. In the weekly time frame, the dollar has just consolidated over here, made this range, but at the same time, we're seeing that bullish momentum as it is breaking out of that range currently. If we go to the daily time frame, we'll see that there have been these two impulses up ever since mid-March. We're seeing those two impulses up on the daily, and we see, using our Fibonacci retracement from swing low to swing high on that previous impulse leg up, we see that price, as mentioned in my previous videos, has gone below 0.5 fib in discount pricing. Afterwards, we see price coming back up and making that new impulse leg to the upside. We're now in this current upside right now. And we see, if we draw our Fibonacci retracement from swing low to swing high, we see that we have areas of liquidity definitely present in or at the discount pricing or at 0.5 fib. If we also notice, using our fixed range volume profile, we see that the highest amount of volume was indeed present somewhere around those areas of liquidity with that yellow line right there. We see that price has been obeying these two trend lines right now, and we see that price has every time bounced against that bullish channel, and we see price coming back down in line with that liquidity and in line with that volume, come back down into this lower trend line here and make a reaction, change of character, and go back up. So we continue to see the dollar as a currency that will continue to be pushing higher. As for oil, we see that oil has actually broken through that very, very stubborn area of support and resistance around the 7,600. So we have a change of character internally, and now finally we have that external change of character, which means that this is definitely a key milestone in the geopolitical tension situation in the Middle East. And so we see that change of character very strongly closing below that previous swing low. And so we go to the 4-hour time frame and we see that oil has left liquidity. We see price coming back up to that those areas of liquidity and sort of reacting to that in the near future. However, oil is quite volatile, so it depends on the progress of the peace deal and how the Iran and the US treat each other in the coming days and weeks, and it might just react to this price reacting to liquidity and not to supply and demand. If we look at USD CAD, USD CAD has once again broken expectations and has made in the daily time frame another impulse leg up. We got those two consecutive impulse legs up for USD CAD, and we see on the daily time frame that USD CAD has left those areas of liquidity behind, and that would be at key places like the 3-month open as well as the monthly open. And so it depends. However, ideally, we would be expecting this to go down there, but in my opinion, it will not, as the USD CAD is quite a very an impulsive pair, and it could just continue going higher without coming back down into discount pricing. In my opinion, it could as easily react to that fair value gap right over here. Could just go over there and continue just pricing higher from there. So that's something that we might be looking into. If we go to USD CHF, we see on the daily time frame that price once again, just like USD CAD, has been exceeding expectations. And we see since the start of this war, since the start of January, we see that impulse leg up, and then once again that impulse leg up right now. And so if we draw a Fibonacci retracement from swing low to swing high, we see the price came down into discount pricing below 0.5 fib in USD CHF, and we see that bearish order flow changing into being bullish ever since the start of June, and we're seeing that price could definitely come back down into those areas of liquidity. We draw the Fibonacci retracement again from swing low to swing high. We see that liquidity is definitely positioned below 0.5 fib, and we'll be waiting for price to come back down there on the daily. However, we look at the 4-hour time frame. This was the most recent demand zone over here, that last sell before that big buy up right over there. And so maybe price could also come back down there just as easily, take that liquidity on the 4-hour time frame, and can continue pushing up there. So we'll be waiting for that. Next, we're also looking at Euro AUD, and we're expecting some sort of announcement this coming week on Wednesday that will be bullish for the Australian dollar. The weekly time frame for AUD, for Euro AUD, we see that reaction from liquidity on the weekly time frame, and we see that very beautiful impulse leg up, which was a fake out in my opinion, that lured those early buyers and then came down to liquidate that swing low right there. So we have that internal liquidation and that external liquidation, and finally we're waiting for that to change character, with that being the swing high on the weekly. However, I think that there will be some opportunities on the daily and 4-hour time frame for Euro AUD. However, we'll have to check on the upcoming news. If we go to the 4-hour time frame, we will see that price has actually gone down to that most previous at Fibonacci retracement and swing low to swing high, and we see the price came back down there, actually changing character. However, fundamentally speaking, I am not really into this as of now, as there is still that last buy up before that big sell down, which for me is a very strong area of supply, and in line with the upcoming news this Wednesday for the Australian dollar. I expect a rate hike for the Australian dollar, meaning this pair would likely come back down first and liquidate everyone that bought from that region. Come back down to this trend line, as you can see, where it's obeying a bullish channel here, really touching that, and then finally probably making its third attempt. Seeing a price could also come back down there, consolidate, change character, and come back up. And that's a place where we will be more interested in those high probability longs, in my opinion. And so we're also looking at AUD NZD riding on the strength of AUD and the weakness of NZD. And we're seeing that price is also obeying that bullish channel that it's making here on the 4-hour time frame. Here we see that those rejections coming from that bullish channel. And also we're seeing that very, very precise price action. They're reacting to those areas of high volume and liquidity, taking that out and actually changing character at that area of liquidity. So we're expecting price to come down first into these areas of liquidity that are present here. Not this one, this is a rollover candle. I prefer for it to come back down to these areas and sort of react to that upward trend line again, just like in USD CHF. We're also looking at the weakness of the pound because the Prime Minister Keir Starmer has actually just resigned today. However, we're not really seeing much clear movements yet on those pound pairs, with pound as the base pair. So we'll have to be patient and wait for a valid impulse like down first, and before we get into that, we're also looking at some indices such as the UK 100 right now. Supply being in control, we draw those two fixed range volume profiles. We have that most recent fixed range volume profile, and we see price really reacting from that area of high volume or volume point of control, and we see it coming back down, and we see that price is now in discount pricing below 0.5 Fib of the most recent impulse like up. And so we're still bullish on the UK 100. However, I see this actually coming back down to this area of liquidity here, in line with that 3-month open, and we see price coming down to that and sort of consolidating, got that internal liquidation, change character, retest, and come back up. That would be the ideal entry for me for the UK 100. Our stop loss there would probably be below that 3-month open and target that high of the previous swing high. And so we'll be waiting for the upcoming and vital fundamental news for AUD, for the Euro, and for GBP, so that we can finally refine our biases for these pairs.